I like the saying that fiat currencies their exchange rates don't float, that they simply sink at different rates.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Welcome to Live from the Vault, brought to you by Kinesis Money. Now, this is the show that goes beyond the headlines to uncover the truth about the gold and silver markets with world-renowned whistleblower and industry expert, Mr. Andrew Maguire. And this week, he's joined in the vault by our first-time guest, and he's our featured guest, Prem Radomski, and he's the CEO of Golden Meadow. And to find out more about Prem, we've included a link down below in the description there. And so, again, we're talking gold, we're talking silver, and so you're not going to want to miss a minute of this conversation here. So let's head right over there to the UK and join Andrew Maguire and our featured guest, Prem Radomski. Over to you, Andrew.
Thanks, Shane, and thanks for the intro. And thank you, Prem, for joining us. First time a guest for us here, and a silver guy. And I'm loving the idea of this. So thank you for joining us.
Thank you, Andrew. Thank you for having me. It's great to be on the show.
So I think let's start with it's a book that you've just published, I think 2 weeks ago. You mentioned just 2 weeks ago.
Yes.
And can you tell us a little bit about that? Because it's all about silver, but it's very detailed, and you're going into a lot of things that it's a very specialized subject. And I think very few people really have a deep knowledge on why silver is a good investment, and all the stuff behind it. So let's drill down into perhaps some of the top reasons that you've published the book in the first place, the title of it, please, and also some of the highlights of what inspired you to even write it in the first place? Because obviously there is a big vacuum of information and a lot of misinformation about silver out there. So really very pleased to have you here. If you could just tell us a little bit about it.
With pleasure. Thank you. So yes, earlier this month, I published the book called Silver Rising, 100 Reasons Why Silver Will Soar. And the book is basically a tiny silver Wikipedia with 100 catalysts for silver price appreciation, all meticulously researched with sources to materials where everyone can verify if the data is correct. Each catalyst is accompanied with estimation of probability and potential price impact. And the reason why I decided to publish this book, actually write it in the first place, was that silver was getting much more attention these days, actually these years, and rightfully so. However, there are so many reasons for silver to move higher. Some make a lot of sense, some not so much. And I thought that it would be a good idea to provide people with a resource where they can find pretty much everything. Okay, I don't claim to cover 100% of the markets. There are new silver uses probably growing up like mushrooms after the rain. And I won't be able to cover each and every one of them. However, I think I covered the vast majority thereof. And after reading the book, people will have a good overview of what silver is all about, where is it headed, what, and most importantly, why. Because while I am making some forecasts in the book is not really about them strictly. It's about educating the investor so that they can make their own judgment, they can make their own decisions, and when they do make them, that they have the conviction to stick to those decisions because they know why they bought or not in the first place. There are so many reasons for silver to move higher and so many misconceptions about it that I thought that that it was clearly needed. I was searching for something like that for myself a long time ago. I couldn't find it. The reports that were there were oftentimes good. There are many good positions on the topic. However, I couldn't find something very broad and very comprehensive. So I decided to compile what I learned in various places and over the years, and write a book about it. Especially that it's high time, given what silver is doing right now. As we're discussing, silver is about 50, and it's not even well, it's not the first time when it's over 50, but it's the first time when it's stayed above 50 for so long. So things are getting really hot on the silver market right now. And moving on to the top reasons for silver to rally. Well, as I'm covering 100 of them, it's a tough choice to pick just a few, but I'd say that the relatively inelastic supply is one of the key reasons. I mean, most of silver, like about 70% of silver, is mined as a byproduct. So, regardless of the price, this will not stimulate more silver coming into the market. In fact, based on the industry data and estimations, it seems that the supply from mines in the following years could either stagnate or even decline slightly, uh, despite higher prices. So that's one of the things that is more or less known about the silver market, but it's still critical. Speaking of critical, silver was just added to the list of critical minerals. So the potential is being now officially recognized. The funny thing about that is I was writing about that in the book before it happened, and so before I published the book, it was already a fact. So I now couldn't, I can't really say that I was right on that, but yeah, I was expecting this to take place.
Well, it is critical, isn't it? In many, I mean, militarily, there's so many reasons into what clearly is a lack of supply. And I think, Prem, one of the things that has frustrated a lot of people who have been looking at silver through the lens of the paper markets, looking at it through the lens of a 96% leveraged COMEX market, which had its time, had its day in pricing silver. But I think one of the most interesting things is when we see backwardations, so close to a first notice event. I mean, December contract for COMEX contract is the largest delivery month of the year. And it's unprecedented to have. And yes, we've seen backwardations before, but so close to first notice, so close to the actual point where you have to stand up, either deliver it or pay for it or roll it. But essentially, those kind of backwardations scream that it's mispriced, severely mispriced. And I think it's so good to have you here right now because that's live. That's been, I mean, we even saw 60-cent backwardations, $3,000 per contract backwardations last Friday. I mean, this is ludicrous stuff. Give us your take on that.
Exactly, the tightness on the silver market is extreme. It's unprecedented, and well, earlier this year, I think it was, yeah, a couple of weeks ago, we recorded the backwardation of almost $3. So that was super extreme. Of course, that didn't last a long time. But as we speak, the December contract is in backwardation. The January one is more or less on par, and contango returns in the following months. But right now, people are paying more for having actual metal than than for the futures contracts, which would normally make sense not to pay more for something delivered in the future so that you don't have to pay for storage and insurance and so on, but not in silver, not right now, because people need silver. I mean, with so little silver available on COMEX and also relatively little silver available in London. Okay, the amounts in London are, well, I'd say decent. However, most of that is owned by ETFs, so it's not available for immediate delivery. So again, there's less silver than it may seem at the first sight. The deliveries of contracts are increasing, even even in March, which was before everything that happened recently, before the entire before the spike in lease rates. Even in March, we had about, I think it was 15,000 contracts delivered. Uh, Again, another record. So the time that people might have to position themselves is probably limited. I don't want to say that the market that the comics will default next week or next month or even next year. Of course, we've heard and read that for a long time. I think I first read that over 20 years ago, that it was imminent. So I don't want to say that it's about to happen definitely. However, I don't recall seeing uh, signs so critical as we see right now.
Yes, it is unprecedented, and I think in as you say, it's from time to time you get these anomalies that went in COVID. Obviously, suddenly the refiners shut down, and you could understand. You can, hang on, there's just no physical. It's not that, so it was an anomaly, and with gold and silver. But this is not an anomaly. This is more and more. And I think one of the things to me, Prem, is I'm very close to the liquidity providers providing liquidity to and from the SGEI exchange, the international facing exchanges there, and what we're seeing to me in simple terms is I know so many people that no longer wish to provide any open interest into the COMEX, don't trust it. It is blatantly gamed, as is backwardation situation. It should just be leveled. It should be paid for. It should be, it should self arbitrage. So, whereas if a trader then goes into face the what is really the gold corridor, but it's also the silver corridor, then I have to own that part first before I can sell it. So therefore, I've got a real supply demand price coming. Therefore, if I'm a producer, refiner, I like that. I don't want to be made a target by somebody who has financed my position and knows exactly where my pain point is. So basically, I think this is, to me, in my view, is that's perhaps why the COMEX is in trouble, in the sense that if they don't buy back these positions, where they're going to find the silver is something like 4 billion in SLV shorts. I mean, someone, obviously, if you can, while some of it is legitimate hedging, clearly some of it's legitimate hedging, but you've got an awful lot of. So if I'm now own SLV or GLD, it isn't there. It isn't all there because it's on somebody else's balance sheet. So so people are trying to escape that situation. So I think, what do you see? Do you see that you have clients that are seeking to find more physical venues to trade?
Well, I agree. I think that comics is in trouble, and that the situation is going to deteriorate in the future. Nobody knows how much longer it's going to take, but the writing is on the wall. And the erosion of trust, as you said, I think it's real. I think that what used to be normal that people, buy futures and wait for future delivery. Uh, right now, it's breaking. I don't think that everyone believes that they will be able to get the silver that they are promised, and it's becoming obvious based on how many contracts are being delivered, how many people and institutions are taking silver off the market, and the fact that they are coming for silver right to the exchange, to the financial markets, essentially, instead of getting it from producers and more traditional sources. That tells a lot. Well, I don't have evidence for that. It's just a speculation on my part. um, I would assume that there are some behind the scenes agreements being made, that various counterparties that have silver uh, are in talks with each other, to kind of cover each other's back in case they can't deliver silver on time. And this might work for a while, and like we saw recently, like there was no silver in comics, and then we had a lot of silver in comics, but it had to come from London, and it caused physical tightness in London. And so the real problem, I think it's much more global. It's not just comics in my view. It's a global problem, because it's all nice as long as comics can get silver from elsewhere when the demands exceed what they have. But what if those other places are in the same trouble? If they also have to find silver from somewhere else, then when it's then when the global run for silver will begin. And so it will probably look, again, just a speculation on my part, no evidence for that. It might look nice. Okay, we don't have the silver, but they will get it from somewhere. The problem is, at some point there will not be enough somewheres to get silver from, because the structural deficit is here. It's widening. Okay, the forecast for this year is not as big as last year, but it still adds to the cumulative deficit. That's the problem.
I think no, but I think you're onto something there, because I think, and obviously it's not a conspiracy theory. I mean, we've been dealing with, we've had been limited as to what we can buy in the past. UBS have said, you have this much, you start asking for more, well, we could blacklist you, and this has happened over the years. We're literally. So if I'm in a position, so really to kind of bring this to a head, if I'm in a position as, say, UBS, I'm just not naming JP Morgan, whoever it is, and I've got more orders than really I want to provide at this price, for whatever that reason, and we have derivative associated with those things. That I may not want to deliver all my orders at this price. So therefore, I would then make sure, what I would make sure is my biggest clients, Samsung, Nokia, all of these factories that do get that rely on just in time. So they would require their bars. Now, if by chance I failed to deliver to one of those major suppliers, it would telegraph that the first thing they would do is say, right, never risking this again. I'm going to market. I don't care what I pay. I'm going to buy. I'm going to store silver myself. And interestingly, we've already got the likes of Elon Musk buying silver directly from Mexican mines, and it's not even hitting the market anymore. So this is so interesting, because you talked about supply deficits, and then we've got all this other stuff going on as well. So this is so interesting to me.
Yeah, exactly. And when that happens, when a big company like Samsung request their silver and they can get it, well, then we can have a palladium type price spike like we had over 2 decades ago. This kind of thing. So, very few people would believe that this is possible in case of silver, which is, well, not as big as gold, but it's bigger than palladium. However, the problem in silver, I think, is much bigger. It's there are many more parties that will probably be competing for those last silver bars that are available, and the situation now is different from the fundamental point of view. Well, okay, it's different each year, of course. Geopolitics change, but uh, we are in the middle or at the beginning of the AI revolution. So it's I mean, I don't mean stock market valuations and so on. Okay, that's I think that's personally I think that the stocks and AI stocks are overvalued and they are bound to correct probably in a big way. However, the technology itself will stay here. It's already proven useful on many fronts, and it impacts silver market much more than it's currently talked about. The more I investigated the situation and the links between the AI revolution and silver, the more amazed I got by this, because the implications are not just on the demand side; they are also on the supply side. But from the demand side, the thing is that, well, basically, there is no substitute for silver in terms of what's the best. Silver is the best conductor of electricity and heat, period. That's it. You can perhaps substitute it with copper if performance is not an issue. But if you use just a little silver and performance is an issue, then there's really no substitute. You have to have silver. And while silver is not used in AI chips directly, other metals like ruthenium are. Silver is used in the memory banks. It's used in data storage and in the infrastructure, and basically everywhere where you have uh, high tech, and silver is and will be used. That's why I think that while we have multiple uses of silver right now, we will have many more in the future as new technologies develop. I don't know what they are, and nobody can tell what kind of stuff we'll have in 3 years from now. But I can tell you that a lot of that will use silver, exactly because there is no other best conductor of electricity and heat. Electricity, why it's important, it's kind of obvious. But heat, of course, computers when they process information, they get well hot, and the cooling is important, or it impacts performance on or everything could get damaged. So that's also very important. But how does it impact supply? That's connecting the dots here is real mind blowing, because essentially I'll, there's a huge cost component in silver mining. That's name is electricity prices. Uh, it's when you take everything together. I mean everything, even including transportation, raw materials, and so on and so forth. When you add all those things up, and not just the direct production costs, it's probably close to half of the total production costs. So, and the yeah, it's about half when you add all those tiny things up. But even if it's just 30%, it's still a major. My point would still be valid. And the thing is, AI and everything related to it uses a lot of electricity. So that's a demand pull on electricity prices, which means that the costs of mining will go up because the electricity prices are going up. And in a way, which which sounds crazy, but it's actually true. Electricity prices might have bigger impact on silver supply than silver prices, because ultimately silver is mostly mined as a byproduct of copper, lead, zinc, and gold. So mostly their its supply of silver depends on price of other metals, but mining of those other metals also requires electricity. So with higher electricity prices, you get negative impact on silver supply, and even and this is exacerbated by the fact that the quality of ore grades is declining on average, and new mines, new deposits that are discovered are generally not they don't have as much silver as they used to be. Like the high quality properties have already been developed or discovered, mostly, of course. There can be exceptions. And another thing related to the topic is that as you have to develop lower quality ores, I mean, extract silver from those ores and so on, and mine them. The electricity demand does not increase in a linear way. It increases faster. So it's when you combine all those factors, the fundamental situation for silver appears extreme. And so because on one hand you have inelastic supply, but then again it's vulnerable to higher energy prices. Energy prices have all sorts of determinants, but AI revolution is one of them, one of the key factors. And the AI revolution itself is also triggering demand for silver for the infrastructure and for data storage and so on and so forth. So you have impact on both sides of the market, and I don't think this is being widely considered right now. So that's yet another reason to expect higher silver prices in the following years. I don't want to say about weeks or months, because markets can get overvalued in the near term due to emotional reasons as well. But in the following years, I'm super bullish on the white metal, as you can tell.
Yeah, no, I think that I've never considered that, and that's really interesting, because it's the kind of thing that I think when you drill down into the information that you've researched, it's the kind of stuff that's, if that's just one example of why perhaps people should look at your book, because there is stuff in there which you've thought through, which I never heard of that, never even thought about that. And that's a really important point you've just made there. And especially as we've just got AI, we've got all these, we've got silver being used in weapons, for goodness sake. We've got so much new information coming through, and to think that yes, these electricity costs, and as you say, the lower grade ores require exponentially more electricity. I mean, it's really interesting. So I was going to ask you something, because I get asked this every single time I speak to people. One of the questions is, do you think we'll ever get back to God's ratio?
It's a tough call to say where things will stabilize in the long run. I would go with between 20-1 and 50-1 would probably a move towards 16-1 or something along those lines during the price spike. The market can get really emotional in the final parts of a given rally. We saw that in the final stage of the great bull market of the 70s, where silver soared in the final weeks. And I expect something similar to happen also in the future. So I think that silver can catch up based on this tendency, and therefore the ratio between gold and silver could decline in a substantial way. However, that's just icing on the bullish silver cake. Basically, we have literally 100 reasons for silver to move higher, and we have physical tightness on the silver market that we don't have in gold. Of course, gold has its own reasons to rally in the long run, but as far as silver is concerned, it has all those industrial uses, the quickly increasing demand from solar panels, and the physical tightness that we already talked about. So I do think that the ratio between gold and silver is going to move much lower in the following years. The ratio itself being high is not a reason for it to move lower. No. However, all those reasons for silver to rally are, and the tendency for silver to catch up during final stages of bull markets. That's another reason for it to move lower. So, and that would be in perfect tune with what we saw for the vast majority of history. So yes, I do think that we will see gold to silver ratio at much lower levels. I'm not sure how low it will stabilize. It's a tough call. I'd say that probably 20 to 1, between 20 to 1 to 50 to 1, fluctuating over there. But I do think that gold to silver ratio will move below 20 to 1 during the price spike.
And again, that's this is you discern this through not just a single channel. You're discerning this through, obviously, your part of your 100 reasons. It is just one of those amalgams that say to you, your algorithm in your mind, it says, you know what, and this is why it's so useful to have you here as a specialist, because we get to dig into these kind of thought processes, and they're gold in themselves, because again, we sometimes focus with tunnel vision on individual aspects, and we tend to focus on those, and it's really useful. It's useful to have that wider view. So obviously, most people must ask you, where do you think the price is? Well, I mean, it probably depends so much on the ratio and other factors. You've already talked about higher costs in the whole production process is getting higher costs. It's already a supply deficit. It's essentially, it gets consumed. And so, unlike gold, it gets consumed. So, you're going to need an ongoing supply. Do you think there's enough supply coming to meet this demand?
Thank you for the compliments, and it's also a great pleasure to be here. And to answer to your question, no, it will be a very difficult situation when everyone will need their silver and there's just not enough thereof on the markets. The problem is not just because of the relatively inelastic supply of silver from mines. The problem is also limitation in case of recycling. We recently had the very interesting situation in case of silver recycling, where the refineries were unable to process all the silver that they got. So they were only able to recycle so much of silver. So the recycling capacity was maxed out. So even if many people try to sell their silver and have it recycled, they just can do it. They could sell it, but it doesn't mean that it would enter the market in the form that is needed. So there's also a bottleneck in case of recycling.
So essentially, when people ask me, is it a good time to buy silver? I say, look, if you're a stacker, if you're not a trader, then why would you not average in every single week, month, year of the year? And rather than trying to chase what is a volatile, paper-induced, I call it a toxic mix of inputs that really have no relationship to the real silver supply-demand price. And I like to look at supply-demand. I like to know, am I buying something that is of good value? And so I just say to people, ignore all the, and if you're a trader, well, you're in there with, you're against a house who is far bigger than you, who will know exactly where you've borrowed your short silver positions or your long silver positions, and know your pain point, and will rinse you because they have the ability to do so. So I always say, ignore all the chatter and simply, based simply on some of the stuff you've just talked about, the fundamentals say that it's going to cost me more dollars or pounds or euros or zloty or whatever it is. It's going to cost me more of those to buy that same piece of silver. Simply, it's not that silver is going up in price. It's simply going to cost more of my debasing dollars to actually buy that bar.
Yes, I think that both would be true. I would say that yes, the value of the dollar will go down, as will the values of other fiat currencies. So silver will be worth more in their prices. But I would still say that silver's value is going to go up, and I understand it as that silver's value compared to value of other things like average car or house or an acre of land, that silver price will still go up. That's what I expect to happen based on the supply demand situation. But yes, I think that even if most of those 100 catalysts that I'm describing in the book didn't play out, then there's still the erosion of value of the fiat currencies would still make it more expensive over time. But I would like to clarify that that I mean all fiat currencies, not just the US dollar, because I like the saying that fiat currencies don't, their exchange rates don't float, that they simply sink at different rates. And basically, as far as the US dollar index itself, it could even move higher. But well, that it means is that some other fiat currencies, mostly euro and the yen, will be relatively cheaper compared to the dollar. But they are all going to be inflated in the following years. So and that's my point of view on currencies and then silver's value. But if I may, I think I should say something about the photovoltaics and solar panel, because if that's okay with the discussion.
Yes, please. Yeah, please.
Okay, because I think well, it's widely known that that silver is being used in solar panels, and that many people know that the industry is growing, but the extent of the growth is what might surprise many. Okay, so the thing is that the International Energy Agency expects that there will be over 4,000 gigawatts of new solar capacity by the end of the decade. So in just a couple of years. To put this in perspective, this means nearly 10 times the current global capacity, and it would require massive amounts of silver. Okay, how much? Depending on who's estimating that, it's generally the case that about 12 to 22 tons of silver are used per gigawatt. Yeah, that's a pretty wide range, but either end of the range has important implications. So even if we are in a situation where we have the lower end of this range, so 12 tons per gigawatt, this means that the solar deployment would consume about 1.5 to 2.5 billion ounces over the next 6 years. So that's roughly 250 million ounces annually. That's quite a lot compared to the current numbers. But it gets even crazier if we consider how much is that if it's in the upper part of the range. So 22 tons per gigawatt. In this case, that would imply 450 million ounces annually. And that's more than double of what silver is used in photovoltaics right now. So if that happened, this alone would increase the deficit on the silver market from 188 million ounces to about 445 million ounces, more than doubling it. So just if the demand from the photovoltaics increases according with the official forecast for 2020, and if the silver use per panel is in the upper range of the estimates. So that's crazy. That's crazy, and that's just photovoltaics. That doesn't take into account all the AI revolution that I talked about and anything else. That's just that. And basically, we have two competing forces here, because obviously people, and in this case I mean producers of solar panels, want to use as little silver as possible. Okay, so they try to substitute it with copper, with various efficiency. And on the other hand, we have new types of cells, we have new innovations which make the panels more effective and so on. But those new type of cells, like so-called N-type cells, as in the opposition of the old P-type cells, they use more silver. So if those two forces could cancel each other out in various proportions. So overall, this still could happen. Despite all the efforts to substitute silver, we could still have such huge amounts of silver that is being required by photovoltaics in the following years. And the best part, this will probably be required even if we get a bigger pullback on the stock market, and even perhaps despite some economic problems on a global scale because of all the green energy mandates. So the demand is here, and it's likely to accelerate. So yeah, I thought this was important to note and to share this.
It's incredible, to be honest. Again, this is information that really we all need to be thinking about. I had no idea of the scope and the scale of this. I mean, Prem, I think because I think I'm going to ask you, because we're limited for time here today, I really would like to come back, circle back on some of the other questions, which I know that my subscribers and our subscribers really want to know. Now, in the meantime, we've got a link where they can access your book, and also, is there anything else? On the links? Is there anything else where they can interact with you, or is that just to simply buy the book?
Yes, I think you will find all the links below the video, and the key one for the book would be profit.silver2026.com. That's profit.silver2026.com. And the other links would be a link to my platform called Golden Meadow. That's goldenmeadow.eu, and it's a place where we have multiple financial newsletters, most of them available on an exclusive basis, only on Golden Meadow, including my own newsletter where I'm forecasting gold and silver prices, also mining stock prices. And there's also a link to our flagship product called the Diamond Package, which includes multiple experts and their insights, all inside one prestigious product. So those will be the three things that you will find below the video. Or maybe bonus fourth, the free mailing list on goldpriceforecast.com.
Thank you so much for joining us today. And I really do encourage people to land on your site, have a look at everything you've got to offer. This is a very interesting subject. And I think you've opened my eyes, which is, I love learning new stuff. And I'm sure a lot of people around us will too.
Definitely. I definitely will. Thank you. Thank you for inviting me to the show. It was a great pleasure to be here. And and to meet you finally.
Thanks for joining us on this episode of Live from the Vault, brought to you by Kinesis Money. And a huge thanks to Andrew Maguire and our featured guest, Mr. Prem Radomski, for the cutting through all the noise out there and sharing insights that you just won't find anywhere else, especially on the mainstream media. Now, if you like this episode, make sure you're subscribed and turn on those notifications so you never miss out on one of these episodes. And don't forget to share this episode with someone who really needs to hear the real story behind the headlines. And we're back soon with more hard-hitting truths from inside the precious metal space. And until then, thanks for watching, and we'll see you here next week on Live from the Vault. Bye for now.